Hello friends, a very warm welcome to you. We'll take a look at the IPO of MTAR Technologies Limited, which is set to hit the streets very soon. And we'll briefly discuss whether you should be investing in the company or you should, just let it pass by. So let's take a look at the pros and the cons of the company, and then probably you can make a decision for yourself. So what is this company about? What has been the story of this company so far? MTAR was constituted in 1970. That's quite a long time back. It didn't start in the current form that it was, but it started as a partnership firm, and it was called as Machine Tool Aids and Reconditioning, and some other kind of a name. It was started between Mr. K. Satyanarayan Reddy and P. Ravindra Reddy. So initially it started as a partnership firm. Then nearly 3 decades after that, that is in 1999, it got converted from a partnership firm to a private limited company. And then this company started manufacturing, this shower and finance assembly for the flight systems. So as the years went by, the company developed newer and newer technologies, and it started catering to, nuclear energy, then defense, aerospace, then clean energy, and many other kinds of niche technologies. So as of 2020, the company manufactures 14 kinds of products in the nuclear sector, 6 in the space sector, space and defense sector, and 3 in the clean energy sector, along with some import substitute products. So let's take a look at briefly how the IPO is stacked. The price band is between rupees 474 and 475. The issue date, that is, the IPO will open on 3rd March 2021 and it will close on 5th March 2021. The issue size is 596 crore, and the issue consists of 124 crore rupees of fresh issue and an offer for sale of rupees 473. The QIB portion is up to 50% of the net offer. The non-institutional investors will get, say, around 15%, and the retail investors around 35%. So what is the company going to use these funds for? Well, these funds, as well as the fresh issue which happened recently, will be totally used for firstly repayment or prepayment of certain borrowings, and secondly for funding working capital requirements. And so what will happen net is the promoter stake pre-issue was close to around 62%, which will become around 50%. And the institutional shareholding will reduce from 37% to 7%, and the public shareholding will increase to 42%. So like I mentioned earlier, this company was started as a partnership firm, and then it got converted into a private limited company in 1999. Currently it has got 7 manufacturing units situated close to Hyderabad in Telangana. The key operating segments of this company are firstly nuclear power, then space and defense, and thirdly clean energy. Now, one very unique thing about this company is that the products have very high precision requirements and very stringent accuracy conditions, because of which the products of this company are extremely niche, technology intensive, and they have sort of no replacement like by any other company. So that their customers are very sticky. And obviously there are some very esteemed customers that the company counts among its clientele, such as, say, the Nuclear Power Corporation of India, then ISRO ISRO, DRDO, Hindustan Aeronautics, and Bloom Energy. Main revenue segments, like I told you earlier on, are the 3 segments. But out of this, each of these 3 segments has got a very healthy order book. I mean, the nuclear power segment has got close to 93 crore of an order book. All these numbers are as per 31st December 2020. The space and defense segment has got more than 160 crore of order book, whereas the clean energy segment has about 80 crores of order book. The largest amount of, or the largest chunk of revenues comes from clean energy, which is 49%, and after that you have nuclear power, which is close to 25%, and then you have space and defense, which is close to 21%. So what are the key drivers for the company? Firstly, like I mentioned, its products are extremely technology oriented with a very high complexity as far as their manufacturing and production is concerned. Then the position of their customers is such that they are like monopoly in their particular segment, the customers of MTA. And lastly, there's a huge sector opportunity with government support as well as far as its clients are concerned. So, firstly, like the technology-oriented sector, as I mentioned, like the products which MTAR makes are, these products demand extremely high precision, reliability, complexity, and very low failure rates. Imagine a nuclear power plant. If it's running, you obviously don't want anything to go wrong over there. It would be a very worrying thing, and obviously you wouldn't want any failure rates or stoppage in its functioning. So this is what MTAR makes, and given its critical products that it has got extremely sticky relationships with its clients. Like with the Nuclear Power Corporation of India, it's been associated for 16 years. Then with ISRO, it's associated for nearly 3 decades, and with DRDO for 4 decades. So that really speaks quite a lot about the niche and highly technology-oriented products that this company has. And also, like most of these products have very long life cycles and also requirements for maintenance and refurbishment, because of which the client has to come back to this company. So moving on to the next point, as I mentioned, the customers are near monopolies in their field of operation. So if I look at the nuclear sector, you have got Nuclear Power Corporation of India, then you have got BARC, obviously their position is unchallenged as far as their target segment is concerned. Similarly, as far as space, defense, aerospace are concerned, there's ISRO, which you don't have a substitute for in India. Then there's HAL, there is DRDO, and in clean energy, there is a US-based company called as Bloom Energy, which MTAR caters to. Now this Bloom Energy is a US-based company which was founded by an Indian American. It's situated in the US, but MTAR is a major vendor for this company. Then if you look at the sector opportunity, firstly the domestic precision industry, it's estimated about 4 trillion rupees. That's a huge number. And this whole industry grew at about 7% CAGR over the past 5 years. And going ahead over the next 5 years, it's expected to grow at a similar rate of 6 to 7%. Now you might say that's not a very fast rate, but look at the scale at which the operations are happening. We're talking of numbers as high as 5 and 6 trillion rupees. So that's a huge sector opportunity that we are looking at. Also the nuclear capacity. If you take a look at the India's nuclear capacity, then it is expected to grow at about 7.5 to 8.5% over the next 5 years. Also, there is a lot of requirement for maintenance as well as refurbishment, and which is again a very huge number. It runs into more than a lot of billions of rupees. So that's a huge market that we are talking about. Then, if you look at the space equipment industry, ISRO is expected to undertake a total of 36 missions over the next year and 31 in the year after that. This is against a total of 14 missions that it undertook in FY19. This is as per the RHP of the company. Because of which what will happen is that the overall space equipment market in India will grow at around 7 to 8%. Again, the government has been extremely supportive as far as the nuclear power or the defense sector is concerned, because obviously India's defense budget has been going on, and it has been increasing at a very high rate due to obviously border tensions that we keep having. So the government is looking aggressively at localizing a lot of equipment which are used in defense-based items. Very famous programs that the government has launched over the past few years is firstly the Make in India program launched in 2014 and the Atmanirbhar program launched in 2020. Nuclear Power Corporation of India is expected to roll out 14 reactors in the near to medium term. Now, what this will do is that India's nuclear energy spend is expected to become 6 times over the next 5 years. So that's a huge number that we are looking at. Also in May 2020, the government increased FDI in defense manufacturing under the automatic route from 49% to 74%. So all in all, you can see that there is a lot of sector potential as well as stickiness with its customers, and at the same time there's a lot of government support as well. So now let us briefly take a look at the management team. So as I mentioned earlier, Mr. P. Srinivas Reddy is the managing director of the company, and he has a very, you can say, professional management team in place with Mr. Devesh Dhar as the COO and Mr. Sudipto Bhattacharya as the CFO. Again, if you take a look at the board of directors of the company, these are people which are very illustrious. A lot of them have, like decades of experience in their own field. Some of them are, there are people from ISRO, there are people from NPCIL, obviously people who previously worked in this organization. But then it's got a very illustrious board of directors. So that gives us quite a lot of confidence regarding how the entire process, how the entire management or the decision-making process must be taking place at the company. And if I look at the financial performance, then the revenue CAGR has been very stable. I would say that over the past 3 or 5 years, more than 20% is what the company's top line has grown at. Even the EBITDA margins, if you take a look at the past 3 years, have been higher than 25% since FY19 and FY20. Also the PAT, the company went into losses in FY17, but after that there has been a steady increase in the profitability, and this has been reflected in the EBITDA margin as well as the PAT of the company. So the key financial metrics, if I have to take a look at, the debt equity ratio, it's very much under control. It's less than 0.2 currently. The asset turnover ratio, well, it's a bit on the lower side, but that is the nature of the business that the company is into. Again, the net working capital as percentage of sales might look on the higher side, but this is because of the higher working capital that the company has to have given the sector in which it operates. Also, ROE and ROC are satisfactory at around 17 and 14% respectively, and the company has been generating free cash flow for the past 3 years. So, of course, now I told you a lot of positives about the company. Now, let me tell you some of the risk factors as well. Firstly, there is a high client concentration, let me tell you. Like Bloom Energy contributes 49% to the revenues. Nuclear Power Corporation of India contributes 23% and ISRO 8%. So the client concentration is very high. However, one can say that given the stickiness of the clients and at the same time the high technology intensive products that it makes, I don't think that's too much of a risk. Plus the business involves high working capital, that's the nature of the business, hardly anything that you can do about it. And there's a presence of formidable competitors as well, by the way of L&T, Godrej and Boyce, Hindustan Aeronautics, Walchandnagar Industries and some other companies. So you have taken a look at the positives and the negatives. So what should you do now? Well, I think you will be able to join the dots given all these things. As I mentioned, it has a highly technology intensive products which are hard to replicate. Hence the entry barriers are very high in this sector. Then again, there is no major listed, listed peer in this space which you can use in order to ride on to the, Indian space research story or to the nuclear program of India. Clean energy is emerging as a, major theme with hardly any listed players to ride on to the story. Also, Atmanirbhar Bharat also lends more credence to the long-term prospects of the company. All in all, I would say that investors can subscribe to the IPO with a long-term holding horizon. So that would be it from my side. I hope you found the video useful. Thanks a lot and have a good day.